My friends, what is going on? Welcome back to the channel. So I think first and foremost, we should probably start this video off today with just a little bit of like, breathe in, breathe out. Like anything else in life, this too shall pass. There's no doubt it has been a bumpy ride here the last, let's see here, what is this, couple weeks now? I mean, realistically, since February 20th, virtually seen nothing but downside. You guys know me. I'm not going to sugarcoat anything to you. So we'll talk about the good, bad, and the ugly. Kind of what I'm looking for overall for a potential recovery. I do still think the most likely path into summer is an overall recovery. Yes, I think there are some troubled waters ahead. However, people seem to forget that even when the market is marking down or we're in an overall distribution phase, that there are still a lot of snapback rallies and bear market rallies that happen. And we're not even in a bear market, right? Like you got to get a 20% decline before we even talk about that. So, and right now we're only at 7% today. So I do think I was just kind of like, man, I feel like there's a lot of people kind of like a little bit of fear and panic. I kind of felt it a little bit in my Discord today. So I'm certainly not always going to be right. I don't pretend that I am. But I do feel like I have a pretty good idea of overall what's going on in the market and what the charts are telling me. So having said that, before we dive into that, you guys know the deal. Nothing about this video is financial advice. I am simply a guy on the internet looking at charts, trying to navigate his way through the market just like anybody else that is a retail trader. I put my pants on and tie my shoes the exact same way that you do. So, like I said, some calls that I make are going to age like fine wine, and some calls that I make are going to age like milk. And the reality is when it comes to trading, all you really are is you're a professional risk manager. So that's what you have to do. You have to manage your risk. For instance, last week, I don't remember what day it was, but I basically said, market's looking really shaky to me, guys. I'm exiting all my more speculative names and risky names. And some people are like, oh, you're stupid or you're an idiot or anything like that. And the reality is there's only one, which is Gorilla Tech, GRRR, which congratulations for those of you. I sold when I made 40% on shares alone. It ran as high as 83%. It had a kind of a nasty pullback today, but a lot of people made good money on that, so congratulations. And I always want to be clear, like when I share your successes, which if you haven't done so already, follow me on Twitter or X, Colin_Gladman. I apologize in advance for all the bots and scammers and things of that nature. But I only have one X and I only have one Discord. And by the way, yes, I will open the Discord tomorrow right at market close. Be taking about 25 new members. If you're interested in that, follow me there and have your notifications on. So I love it when you guys, are making money. It's just when it's more speculative like that, like GRRR, you have to take those profits off the table. And when you don't feel right about something, like I'm a huge believer in like trusting that gut intuition, that when you just go, things don't feel right to me right now, I don't like what I'm seeing, it's okay to take your chips off the table. You can always get back in if you're wrong. I always tell my team, you can always jump back in with profits if you're wrong. If you watch your profits go red, then you have less money to jump back in, potentially at a higher price, and therefore buying you less shares of a potential company that you may want to own. So when in doubt, never let anybody tell you it's not okay to take profits. That's what we're here for, man. Like we're here to make money. You want to be a cheerleader for a stock or anything like that, go buy a skirt and stand on the street corner and yell, I love Tesla all day. Nobody loves Tesla more than I do. Well, actually, that's not true. There's definitely that. But Tesla's my favorite stock to both trade, invest in. But I've bought hundreds of thousands of dollars worth of puts on Tesla over the past couple weeks. So I'm here to make money. All right, let's talk about the indexes. So things that I just don't like. Obviously, let me clean this up just a tiny bit for you. So on my screen, this blue line, this purple line, and this teal line. So the blue line is the 50-day simple moving average. The purple line is the 100-day, and the teal line is going to be the 200-day. it's never a good sign when that blue line, so your shorter term price average, starts rolling over and starts crossing below your longer term ones. When the 50-day crosses below that 200-day, that's what's commonly known as a death cross. For instance, if we go back last time it happened, now please remember, when we're talking 50, 100, and 200-day, these are very lagging averages. So this is not uncommon to see, like when you see a death cross happen and then it crosses back up and you have a V-shaped recovery. However, still, when it happened, you saw a further 6% decline. So we are on the verge of that coming to fruition if the market keeps coming down. This one's obviously going to kind of keep curling like this, while that 200 kind of keeps slowly coming along. So, potentially maybe in April, you see something like that. I posted on Twitter a couple days ago. I was like, hey, SPY, just go touch the 200-day. Like, you're right there. And this is what happens, right? Oh, we're going to touch it. We're going to touch it. We're going to touch it. And then today you actually get the touch of it. And this is the first time SPY has touched its 200-day moving average since November of 2023. Okay, so almost a year and a half. So periodically, SPY needs to do that, right? And you can have long periods. Back over here, post-COVID, July, was that July or was that June? I apologize. That was June of 2020, and then it didn't touch it again until January of 2022. So this is all very common. I personally think, so this is going to be the bear market, right? This is going to be the bear market of 2022. I think we're in more of this style of correction from August of 2023. And it doesn't mean that it's going to play out like literally the exact same way. But this top right here, there's no doubt about it. It's ugly. No ifs, ands, or buts about it, right? We have a low volume walk up to all-time highs, and then essentially we just have that waterfall that is coming down. I think the most likely place for us to get a snapback rally is going to be right around 565, somewhere between 560 to 565. The reason for that is that's going to be our tops from July of 2024 all the way to September of 2024. So July, August, and September, pretty much all of September, that was our tops. Then we retested it as support, basically created kind of like a little double bottom look right here, and then we went on. Let me explain it like this, guys. I always say that, like, when you think about what are the moves that the market is going to make, think about the move that what is going to screw over the most people. There's a saying that it's that a hedge fund manager, the other day, my buddy Bronx, who runs my Discord with me, he was talking about how he saw an interview and the hedge fund manager was like, yeah, we pretty much just put our buys where most people have their stops. And it serves us well in the long term. Doesn't mean it's always going to win. We see on options flow every single day in the Discord that big money winds up having to close trades for a loss. The goal is just to make, you're going to have a loss. Anybody who pretends like they don't lose when it comes to trading at times is a complete liar, fraud, scam artist. No ifs, ands, or buts about it, period. That's the big reason that I post my losses just as much as I post my wins. Thankfully, I have more wins than I have losses, but I still have losses. I got juked out on NVIDIA puts yesterday at a 20% loss that would have run over 100% today. And those are the moments that just make you go, ugh, so infuriating. But it's also the moments that make you hold on to trades too long. Be a good loser. BBAI is a perfect example. I cut it because I was like, dude, you know what? This is a little too speculative for me. They've got earnings coming up. I just don't like what's going on. I'm going to go ahead and take, and it was about an 8% loss. I'm going to take my 8% loss, and I'm going to move on with my life. And then on earnings today, it dropped like another 15-20%. Plus it dropped another like 10% before that. So the reality is even when you take good losses, you're still making money because you're preserving capital, and that is what is crucial. That's why it's just where I always say I beat most people in the market is two important areas. I really feel like I understand a lot of market psychology, and I know I beat people in the discipline aspect of things. Like, it's just, you gotta get it in. I've got a ton of activities I gotta go do for kids tonight, and I was like, oh dude, when am I gonna be able to get my workout in or anything like that? And I almost was just like, I'll just go ahead and pass on it today. And it was like, no, that's not who I am. I'm not someone who's just gonna pass on a workout just because it's not the most convenient thing for me to do. Getting my workouts in every day is just who I am. So if I sound like I'm breathing heavy, or if I pass out at any time, it's just because I got off the treadmill. Sorry. This is what happens when I just sit down and start rambling. But enjoy. And thank you for liking, watching, or subscribing. So the easiest thing to do is just, we come down here, we touch the 200-day SMA, we bounce right through it. I think when the snapback rally is going to happen is when everybody gets stopped out. So there's obviously going to be stops on that 200-day. But here's a very clear and obvious line in the sand, right? Some people that I follow that I really respect on Twitter literally called it that today. We have a kind of a clear and obvious support resistance flip line in the sand. What's most obvious to me is, regardless of what happens kind of tomorrow, even if we do wind up kind of making our way up here, is at some point in time we got to take out all these 565 to 560 people. Those stops need to be taken out. Then what you'd want to see is a pretty violent rally from that point in time. Once everybody gets stopped out, then smart money will start to enter the trade. It's why I always go back to the saying of, once all the smart money is already in, there's only one kind of money left, right? And it's not smart. There's a reason there was a movie called Dumb Money made. So I think that is the most likely scenario, is we have some type of capitulation style event. And you could argue, those of you that think like me when it comes to like Wyckoff theory, you could argue that this was a selling climax followed by an automatic reaction day, followed by a sell test day on the 200-day. But the volume still, if the volume was really low, I would buy that. I would kind of feel like, okay, I think we're going to rally from here. But the volume was still elevated. And if anything, this automatic reaction was the lower volume. Another thing that I don't like is the fact that this gap didn't even come close to filling. All right, like we pushed up, but that gap, it was probably pretty close to like a 618.5 retracement. Yeah, so I mean, pretty much as soon as it passed the 0.5, didn't even quite get to that 618 before you caught a hard rejection. So it was kind of like, okay, there was a triple bottom, kind of look down here by the 200 SMA, push up, failed. Anytime you cannot fill those gap fills, that tells you a lot about the strength of the overall move. So that means because this gap didn't get filled, sellers are still very much in control of this move right here. So the best thing, if you're bullish for tomorrow, the best thing that you would want to see is you want to see some type of gap up above this kind of 575, 576 level. And I would feel good about a snapback rally if you pretty much push up all day and you get little to no wick going on and the volume starts to pick up a little bit. And that would kind of give you sort of that morning star look where you have a sell candle, a breakdown candle, followed by you get a clear pivot point. So maybe we can throw in a pivot point tomorrow, but honestly, I don't think that's the most likely. I think the most likely thing is, even if this gap up holds into tomorrow morning, we got non-farm payrolls an hour before open. If we kind of open up into this gap area, I think the most likely is you're probably going to sell and you're going to make a new low at that point in time. What I would really like to see, which as I'm making this video in after hours right now with Avgo earnings, looks like everything's up a little bit. So honestly, what I would like to see is I'd like to see some type of gap down that comes down here below the 200-day. And what would be really nasty is something that unloads down here. Now, when I'll feel good about a bottom being in, whether it be a short-term rally, but it'll, even if it's a short-term rally, it's going to be extended. It won't be just a day. It will be multiple weeks of rallying back topside. So the two types of candles that I want to see is a gap down that maybe you drop just a little bit, but overall you don't continue to sink, and then maybe you get bought up a little bit, right? I don't want that. I want some type of candle that is a gap down. Maybe it dips just a little bit, but overall just shoves up the entire day, where it's just like buyers like, okay, we have had enough of this. We are taking the reins from here. And then you'll get a combination of shorts closing out. You'll get a combination of enthusiastic buyers stepping in after a nice pullback. I posted on Twitter a couple of times. After you've had an 8 to 10% pullback, the risk to reward is not to go down anymore. The risk to reward is at least a snapback rally, even if it's short-lived. So I feel like, and the reason I'm saying this, because I also sense it in myself, like when Tesla is squeezing, we have multiple days and even weeks where you feel comfortable just pretty much piling in calls, and even if they go red for a little bit, it's Tesla and it's squeezing and it's going to go up and everything turns out sunshine and rainbows. The same thing has kind of been true with puts here. The reality is for the most part, you can pretty much just buy puts at open, and if you buy yourself any amount of time whatsoever, that turns out to be a very profitable trade. So once complacency starts setting in, that is definitely where you are at the most sensitive point to catching one of those snapback rallies. But you got to put in a good candle. You can't put in some kind of, half-ass candle like yesterday just on real low volume, because then that's you get what you get today. So what I'm going to be looking for, and honestly what I would feel best about, is two different kinds of candles. One I kind of already explained. So something that is a gap down candle, but pretty much you shove up all day and the volume's going to uptick a little bit. We want to see buyers stepping back into this thing. Very similar to what we saw at the bottom on August 5th over here. So even though that candle sold off towards the end of the day, I mean, look at this volume. The overall move, the overall pressure of this candle was for that dip to get bought up. Another type of candle that I want to see is something where we sell off. So even if we don't gap down, I want something that has a deep retrace, but before close towards the end of the day, it really starts to reverse up and you get a nice close. This is going to be what we call a hammer candle. I'll show you a couple of different what it's going to look like. This was one, so anybody that was in my Discord or was following me on Twitter at the time knows I was pretty bearish right here when we came up here and we rejected. Same look, right? Volume started to pick up on this sell. However, this candle that was on September 11th was very telling, and I said the bottom is in for a while here, because SPY, from where it opened, it went 2% red, but then finished 1% green. Candles like that happen very rarely. I'll show you another time that it happened. It was the very bottom of the bear market. Back over here. SPY opened 2.5% down, closed 2.5% up. And that was the low of the bear market in 2022. And then I considered everything a bear market rally until it was March, when we didn't make a new low here. So because we'd always been in a process of making a high, making a lower low, lower high, lower low. And from here, you made your high, you made a lower high, higher high, and then when you made the lower high here, this is when I said, we're off to the races. And that's when we were off. I was still bearish even on this rally, but March of 2022 is when I was like, okay, this bear market's over. We're off to the races, and there's pullbacks along the way. There's always going to be pullbacks, but we're off to the races. So I want something like that. Let's see here. Where was that hammer candle? Here's another great example, right? Volume drastically picking up right here on this hammer candle. And even though we gapped up, right, we sold off, then an immediate intraday reversal, and rally to a nice big green close. Let's see what those percentages were. So 1% down to basically 1% up. So a 2% swing. Those are going to be what you have to look for when you really go, okay, I think we're in for a rally that is going to be extended, not something that is just, like I said, this one was clear. And I said on QQQ, this is what I posted on Twitter. I was like, this ain't it, guys. This is a clean support resistance flip. So this high back over here in July of 2024, it was a massive support resistance flip that we really needed to hold. And then 2 days in a row, so day one, if you'll remember, this is the day we sold off super hard. And I was willing to be like, dude, this could be it. We could be in for the short-term reversal because we swept the 200-day moving average. Sorry, it's red on my screen right now. We swept the 200-day moving average. We're going to have a nice close. And then what happened? That last 30 minutes of the day was just straight knife. Anytime you have a sweep like this where you don't get over the previous day's close, and then what happens the next day? Then you have a weak rally. Same thing, a double rejection. And then today we have the gap down and close off. So, yeah, I really think overall we still have more downside to go. And this 486 is another big level. So let me zoom out here just a little bit. So I had it marked off on my chart from right here because this was a gap fill. It wasn't until voice chat today with my Discord that when I zoomed out a little bit more, I was like, oh, dude, this one's pretty major. So kind of same thing. Maybe we got to take all of these out. There's a pretty noticeable gap right there at 471. That's why it's always important to have these levels on your chart. And please understand, guys, like the gap doesn't fill when like the wicks cross over each other. You have to have, so price needs to come below the close. What was the close on this candle? Price needs to close or come below 471.44 before that gap is considered filled. Is that right? Yeah, close for, my bad. Yeah, 471.44. So let me just put this line right on it. And it's also like if you are inputs and you're doing well, that lets you know, don't wait for that target. Pros get out 2-3 points ahead, which is why I'm confident. This is why you saw those couple of fake outs. It's because pros don't sit there and wait for the 200 SMA. That's what retarded retail traders do. They go, I'll go wait to 200 SMA to take my profits. Because it's just like when it's a super obvious level, just don't wait for it. Sell into strength. Because if you don't sell into strength, you're going to wind up selling into weakness. If you were holding puts going, I just want that 200 touch, I just want that 200 touch. If you're in anything short dated, moves like this that whipsaw you right back to 585, you're in trouble. You lost a lot of profits. Now you have to get that 200 touch. And honestly, you got to get lower than that to get real profits. Now, if it's a long-term swing, that's a different story. But the reality is most people, we're the squirrel. Like we don't got that long-term thinking. That's why so many people fail in the market. You got to be able to be a long-term thinker. A lot of people, I want that 10X or bruh. And so they buy the short-term stuff and they're just like, oh, I'll jump. I swear. Give me that 200 touch. I'll jump out. And they don't do it. And they wind up selling it for red. But they screenshot it about right here. So I'm running out of time, guys. I've got to get to family matters at this point in time. But overall, that's just what I'm looking for. At the end of the day, though, regardless of how much the sell-off happens, you should never be full ported, right? If I always say, look at it from the angle if you were coaching somebody. So those of you that have like full ported and you have no cash reserves whatsoever, if somebody came to you and they were like, hey, Billy, I'm thinking about buying this stock for the long term. And you're like, okay, cool. I like that stock too. And they're like, yeah, I have a $50,000 portfolio. And so I bought $50,000 worth of that stock today. Literally the only way that works out well for you is if that stock goes up from that day on and you actually time the bottom. But let me tell you something. Ain't none of us are that perfect traders. I brag about when I bottom tick. Like I sold some Tesla weeklies today, literally at the bottom tick of that 15-minute opening candle. And I was like, sweet, I timed the bottom. And then I bought some more puts when we went back up to 270. And I was like, oh, I may have timed the top. And then it ran to like 272. It's like, okay, I didn't time the top. But then it all worked out. But the reason I'll brag always about like timing the top or the bottom of a trade is because it just doesn't happen often. At the end of the day, your only goal is to make the meat of the move. So if you take all of your money and it's a stock that you want to own long term and you just full port it right off the bat, the only way that works is if it just goes up from there. You have to be responsible to leave yourself enough cash, because what happens, especially when you full port, is you start going like into that panic mode of going, oh no, how much money am I going to lose? How much money am I going to lose? Where if you just take the responsible route and you just go, I'm going to buy at my key levels. So if I got a $50,000 portfolio, it's like, oh, got to my first level, I'm going to buy 5,000. Oh, got to my next level, I'm going to buy 5,000. Oh, got to the next level, I'm going to buy 5,000. And then, oh, it bounced back up to my level 2. So, sorry, I'm already going way off topic. But so let's say you got 50 grand and you go, okay, 5,000 I bought at my first level as it drops. Okay, another 5,000 I'm going to buy at that next level, it drops. Oh, okay, 5,000 here. Oh, nice. We're starting to catch a reversal. Then when it gets back up to this level, okay, I bought here before. I'm going to buy here again. It comes back up to this level. Okay, I'll buy here again. Oh, it came back to this level. Okay, I'll buy a little bit here. Like that's just how you have to average into positions and build a position, not just going, okay, well, I full ported. What's next? Where do I go get my yacht? It just doesn't work like that. It's not that easy. If it were, we'd all be rich, right? But time, patience, discipline is how you win in the long term. So I'll leave you with this. Don't ever buy a stock that you don't believe at its current price you have a minimum of about a 3 to 5x upside from where you're at right now. So for me, I'm not buying anything like Apple. Do I think Apple is going to 3 to 5x from here? No. Their growth scares the crap out of me. As soon as something comes along, their innovation, they're clinging on to smartphones, which they have, since 2008. And the same freaking phone comes out every single year. Now we all go buy it. But once that's not the case anymore, what's going to happen to Apple? Are they the next innovator and the next big thing? No, I don't know that I see a 3 to 5x in Apple. There's no way I'm going to be buying that. Obviously, I still believe very much that, like with Tesla, that there is 3 to 5x potential there. Now, I could be wrong. I just don't think that I am. And the reason I don't think I am is most people just call me retarded when I say that's what I'm going to do. But you have to find the stock that's it for you. I'll tell you one, if the market gets ugly, Hood's going to be one that I build out a nice big long-term position in. I like their innovation. I like the way that they are constantly improving their product. It's a product that I believe in. Obviously, I'm a trader. I like the way that they're handling all the gold membership stuff. Their user interface is incredibly easy to use. Like, it is definitely the brokerage that I recommend, even though I got millions of dollars in Fidelity. So it's one that I use all the time. I think the stock can easily 3 to 5x from where it is right now. And I like that I see they're constantly growing and improving. So those are just kind of what you have to do. But don't buy stuff just because, okay, this is, somebody on Reddit said I should buy it, or somebody in Motley Fool said I should buy it. Buy stuff that you personally have done your research on, that you go, at a minimum, I see a 3 to 5x move out of this thing. Does that mean you're going to get it every single time? Of course not. But there needs to be upside. There needs to be more meat on the bone for you to invest your hard-earned money into it. Anyway, so much love. If this video helped you out, please like and subscribe, all that good stuff. And I'll see you soon in the markets. Have a good one, my friends.